Hello real estate investors, Sam Hack here for Rent to Retirement, and today we are going to dive into the real estate and economic news for the week of April 4th, 2022. So, what happened? We've all heard about the Great Migration happening in the US due to pandemic-induced lifestyle reevaluations and new remote work flexibility. But new data from OJO Labs suggests that more homeowners are looking to relocate within 50 miles or closer to their current home. While there's no doubt that lots of people did migrate to new cities and states throughout the pandemic, most people are following the traditional trends of historical migration. The main difference that was found is that wealthier people tend to make more dramatic moves, such as moving totally across the country, whereas people in the middle class and below tend to stay around the same city and simply upgrade to a better living situation. While it's unclear exactly why this happens, it can be inferred that wealthier people have the resources and savings to take the risk of completely uprooting from a life in one part of the country and starting anew, whereas lower income people need to stay near a job or family for financial reasons. In our second story, can you guess what has been the number one reason for rising home prices? Well, most real estate experts would say it's a simple lack of supply and that the market is underbuilt with inventory. However, indicators like the exponentially rising price to rent ratio may point to the need for an eventual price correction, according to the Dallas Fed. The price to rent ratio was recently measured as the highest it has ever been since the year 2000, and with rising interest rates, forecasters think there may be a softening in prices. However, buyers are in better financial shape than ever and don't rely so heavily on debt to finance home prices, like in 2008. Likely, the real estate market will not see corrections as large as in 2008, nor do forecasters see a correction in the real estate market corresponding with a global financial meltdown like in the Great Recession. In our third story, let's talk about institutional investors building homes specifically to rent them out. Thousands of new single-family homes are being built in the Sun Belt by institutional investors seeking to capitalize on the build-to-rent model. Some of these homes are being sold to investment companies that turn them into long-term rentals, and other companies are constructing them in partnership with investment firms that own and manage the rentals. The question remains, are these institutional investments in single-family housing helping to keep rents under control by adding new inventory? Or are they taking away from the much needed housing stock that first-time homebuyers are looking to purchase, pushing prices up even higher? In economic indicators this week, the US unemployment rate is at 3.6%. Our average days on market for US listings is 38 days. Our median list price is $405,000. Our average rent is $1,684 a month for a one-bedroom apartment. Average interest rates for primary residences with ideal credit. For 30-year fixed-rate mortgages, we're seeing rates around 5.09%, and 15-year fixed-rate mortgages 3.57%. Average interest rates for investment properties for 30-year fixed-rate mortgages with 20% down were around 5.91%, and 30-year fixed with 25% down rates are around 4.32%. Our number of the week is 24%. Which is the number of consumers who think now is a good time to buy a home. This is the lowest ever buyer sentiment since 2010. That's it for this week's market recap. If you want to find cash flowing and appreciating investment properties today, use the link in the description below to set up a call with one of our investment counselors, and we'll point you in the right direction. Give us a follow on social media and subscribe to our channel if you found this video helpful. Thanks for watching, and we'll see you next week.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.